All right. Good afternoon, folks. It's 3 p.m. Saturday, and it is our time to discuss some matters. It's really becoming more and more important to our small business owners. A lot of us, and we get onto social media, we watch the news, and there are things being discussed right now about President Trump's litigation in New York that really concerns small business owners. So I want to bring this back into a business world discussion, and let's just do some discussion on why President Trump's business valuation gets so much press, and what is business valuation, why he needed a business valuation, how should we maybe need a business valuation as well, and also what is the best practice to do business valuation so we don't get into the situation where President Trump is getting into today. So with that said, let's move forward. And prior to the webinar, we always ask our listeners to go ahead, subscribe to our channel. You see that subscribe buttons right here, and on your right hand side, and log into YouTube channel and the Community CPA channel name, and you can subscribe to our channel and learn what we talk about. We always do things that very current and needed for today. And a lot of our webinar content is not coming from some books that we read. It is really about what situation we have right now. For example, we talked about scaling your business from 6 to 7, and we want to tell you that why a new company needs a tax planning. All of these are really near and dear to you as a small business owner. Business valuation, property valuation is also the same thing, is near and dear to you. You have to know what they are. So I also want to guide you to our website, folks. Do you know to go to our website, communitycpa.com, and there you can make an appointment with us. And so with that said, let's dive into what we want to do today. And with that, let me bring up my PowerPoint. Am I sharing that screen? All right, I believe I am. Why President Trump's business valuation gets so much press. This is about me. I always go through a couple of slides related to the webinars. And our firm is in business for more than 25 years, and I started the firm back in 1998, and I am the CEO and a managing partner for Community CPA, and we are a regional full-service CPA firm. That means we are in different locations. We are in Minnesota and Iowa, and also in California. We are expanding to other areas like Wisconsin and Texas. Those are all in our near future plan. And you can go to communitycpa.com to book appointment. I have a book. I am an author. I wrote Appointment with Ying at 8 a.m. and that you see that picture there is on Amazon. You can order. That book is called Starting a Business. It is a potpourri of stories of our clients. I put it together to teach people how to start a business. The second book I wrote is already published, and it should be online, and I know the Kindle version is already online. It's called Appointment with Ying at 10 a.m. This one is growing your business. Yes, you can start it, but how do you grow? And really, in this particular book, I didn't write too much about business valuation, but my 2 p.m. book, which I am writing right now, that gets involved with a lot of valuation issues and the concerns, and also techniques and the best practice. And today we can cover some of that. And a no responsibility disclaimer, Community CPA provides these seminars on YouTube to encourage small business owners to take matters into their own hands. We do a lot of do-it-yourself webinars. To do well in business, and learning is one of the most key. We are not responsible for any damages you may suffer because of following any of the advice information provided here. If you need professional service and you want to verify the information and getting professional help, right? Although we're not, although we are doing our best to stay informed. But the media situation and the information flow is very dynamic, very very fast in today's world. So you always want to look at the most recent webinars and information to know that's relevant to you today. And obviously what we talk about here is not illegal in nature, and it should not be construed as such. Please consult your legal counsel if you should need advice to proceed on important things, right? Additional claimers is important because we're talking about President Trump, and any reference in this talk to President Trump or his affiliates or others does not constitute or imply how I and my staff at Community CPA would vote. Okay. Additionally, any comments I have about the business practices are from normally reliable social media. And so that's where I get my knowledge from. This session is about business valuation. It's not intended for political comments. And this session is also designed for our small business owners, for you and me. And what is happening in our political world. And I want to interpret that in a down-to-earth, small business point of view and a Chinglish speaking, that kind of fashion. Okay, one of President Trump's legal battleground is in New York, right? A civil fraud lawsuit brought by Attorney General of New York, Letitia James, against Trump in real estate practices in Manhattan. So I want to say that, obviously President Trump was a public elected official, same as Letitia James. So these are representing peoples, representing the districts, and so these lawsuits are not personal in nature. It is people doing their job, right? The lawsuit says that Trump and his team and family misled the banks and others about the value of their asset. So media has a lot to say about this Trump method of valuation. Based on what we learned from the media, the former president and his organization makes an egg into a watermelon. This is a Chinese expression, right? And for other reasons, we'll make a watermelon into an egg. I'm referring to the size, right? To represent the optimal, they're doing that because to represent optimal value to his lender, county, city, IRS, the state government, and the public. And President Trump was listed as 400 of richest American by Forbes magazine, and for the valuation he had, presented to the public. So, valuation is important that you can see. So in this political world, it doesn't matter what drives that. And right now, the review of the Trump method of valuation is under question. So these are media clips, and I just casually gathering them into one page. You can see that how Forbes exposed Trump's lies about the size of his penthouse and 3 times more than what it was. And there's a picture about him, from his penthouse overviewing Manhattan. And then you also have, the CFO, Alan Weisselberg, and how he testified what was done in Trump's organization. So all of these commotions is really geared towards to business valuation. So how are we? What is the best practice? And what small business owners should learn from that? And that's what my focus is. So what is business valuation, folks? Business valuation is a process of determining the economic value of a business or of a property, or combined, typically for purpose of buying, selling, and financing. You hear that, right? Typically for the purpose of buying, selling, and financing. Valuing a business or property involves assessing many factors, various factors, including its financial performance, asset, liability, marketing condition, and future potentials. Just hear that. So when you do a valuation, future potentials is also a piece of that pie, and we can't overlooking that, right? There are different methods for business valuation. and such as income approach, market approach, and asset-based approach, which can be used individually or in combination, can be used in different situations. Maybe you do buy and sell, you're going to use income approach, and then maybe when you do a property valuation with the county, then you will do the asset-based approach. So there's different approaches on the valuation. The specific method chosen depends on the nature of the business and the purpose of valuation. Accurate business valuation is crucial, right, for making informed decisions such as setting a sales price, seeking investment, or settling dispute. So, giving this picture to you, to all of my small business owners and the followers at Community CPA channel, and you kind of got an overall impression about valuation. So if someone standing there goes, my penthouse worth 3 times of what the value is, and the valuation itself can vary based on different methods. But obviously, if the size of it was a driving factor of that value, then if the size is inaccurate, then that will trigger, whether that's a purposefully defrauding the bank or defrauding the sellers, and that could become a question, right? This is what is debated on the media right now, but we don't know where the values come from. If the value is come from future potentials, and that's really part of legit valuation. With that said, let's look at, as a small business owner, what should we learn from that? It is like didn't offer us a good answer. It feels like, well, Trump is the president. That's why what he does is being looked at. I'm little potatoes, and I nobody can notice me, so I don't need to go by any rules and regulations, and that's totally wrong. And what can be said is even president is under this kind of scrutiny. So as a regular citizen, folks, you need to know how to do it right, because you will not get a cut on sympathy and just because you don't speak English, so you can do what you want. No, don't even try to go there. And this valuation do have boundaries. It does have regulations. So, however, is there an absolute accurate valuation a business owner can order and get? So I'm just gonna pay $5,000 and this guy gonna give me the absolute accurate valuation for my property? That's a lie. It is impossible. There doesn't exist. There is no such a thing about a absolute accurate valuation. A valuation is estimation. It is estimation from different point of view. So who is most authoritative to determine the valuation of the business? Issue a valuation report. The AICPA website says about that. So I put the link there, and on my next slide, this is the valuation screenshot I got out of AICPA website. It gives you the resources how a professional person should do the valuation, and it also gives you the method how to use it, and it has guidelines refer that to, and you can look at the first one is Code of Professional Conduct. So as a CPA, and you are regulated under these professional conduct to conduct a valuation, then you also have these other sectors of the of AICPA section 100 and the valuation 100, that would give you the guidance of how to do that, what to do with it. Especially right now, here, we are talking about these closely held businesses, right? You and me and all of my clients, actually 100% of my 10,000 plus clients, we are all closely held business. We are not a public traded company. So those public traded company has its own standard to be evaluated by standard, to be bought and sold on stock market properly, and because they're a public company. But if you're a closely held company like mine, yours, and others, like President Trump's, and those are the ones you don't face the public to trade your stock for that, but you are a entity that you can do your valuation the way you want it. You can estimate your intangible asset the way you see right. Again, there is a professional conduct and a compliance and the tools AICPA offered to do that. And I know if you follow the news, Alan Weisselberg he is not a CPA. And he doesn't even fully understand GAAP according his own testifying to Letitia James, and he just doesn't know what GAAP is. And in an organization of this size, and if you ask a regular CPA, we probably will say that, at least President Trump should be hiring a CPA person to really manage his business instead of someone that just career trained and didn't have any professional training on this, and probably never, I don't know about Alan Weisselberg, whether he looked at a CPA website. This is our Bibles, right? And as a professional, and when we have issues, and AICPA website and IRS website, state government website is our Bibles, and we go there look for answers, and we don't just do what we think is right or what the boss think is right. The boss is somebody that we need to educate in a lot of times. And as a small business owner, do we have a right to determine our own business value? The answer is yes. Yes, you can. You can decide on your own business value. How should we act reasonably so such a charge would not happen to us? That's the biggest fear the small business owner has. It is not, we can't compare ourselves to all of these, these inner working deep state, or they call that deep state. I just call it human relations because they know each other, so they do have relations. And as a small business owners, we don't have that level of connections, which is okay. We can look at what's happening out there and then making sure we protect ourselves. How to protect ourselves, that's what we want to talk about, and knowing why we do valuation, in what case we have to have one, and once we have one, how do we make sure that our valuation is valid and it is not going to be on media being posted like how it is being posted right now for President Trump. And it is really, in the core, it is really about how professionally that business valuation was done. If it was not done professionally, if it is not done by a third party professional, then it is really hard to defend your valuation is the right one. And of course, I will further talk about people who uses those valuation. They also have a share of responsibility. It is not like I give you a valuation and I think community CPA worth a couple $1 billion, and I go to the bank borrow $3 billion because I think community CPA worth $5 billion, and then the bank will do their independent valuation as well. So the bank has their underwriting process to know that how much really community CPA worth, and then they will go to say, no, Ying, you are just over projecting your value. I think you're only worth $30,000. So the most I can give you is $3,000 loan. That's the kind of process out there for the third party to come back in with their own business valuation. So in terms of buy and sell, financing, there's two sides. Each side can do their own valuation. But as a small business owner, and we normally don't even know how to blow up the valuation ourselves. And what we knew is to look at other people, how they evaluate their business, or look at other transactions to reference, to mimic what is already happened, right? That is the slides I showed on the business valuation guidelines and the tools that AICPA offers. And in what situation would a small business owner need a valuation for properties and business. And this is often asked of me by our small business owners because they know, they wonder why would President Trump even need a valuation? They don't get that. And, so there's very big reason why real estate business owners needing valuation, because they need to borrow a certain amount of money from the bank. It's almost like how we go to obtain mortgage for our residence, right? So we bought our house, and we have two W-2s, and me and my spouse, and then we bought this house, and the bank will approve us for whether to let us have the house or not. So the bank actually will evaluate the house we buy, and making sure that with the amount of the down payment we put in, if we default, the bank will take the house and not lose the money, right? So that is what the bank uses, the value of the house you are going to buy to be a collateral of their loan. So what bank does for President Trump is, and he goes to borrow money, the bank will say that, okay, I give you this money, but I collateralize on your asset. So President Trump will give all of his asset to the bank. For example, his penthouse, for example, his apartment building. So all of these ones become part of security. So you can imagine that if these securities are not solid, and if a diamond ring worth $5 million, but it's actually a fake one, an extreme example, then the bank would be collateralized on something that is in the shambles, right? So if really something happened and President Trump didn't pay for his debt, and then the bank will end up with nothing. So that's the reason, an easy to understand reason why valuation for President Trump's organization is important, and why valuation is something that as a small business owner, we also really need to understand, because we buy and we sell, didn't we? So if you are buying or selling a business or property, you need to know its value to set a fair price. This ensures that both parties, buyer and the seller, and gets a reasonable deal, especially for small business owner. And if you are running a unique business and you want to sell, and to have this peace in mind that you are not selling too low, and you're also not selling too high and run yourself out of the market. So you need to have a valuation to know that how much is my business really worth, right? And that's one of the reasons why small business owner need a valuation. I actually have one time has a business, and he actually has a intellectual property. So it's a methodology that he uses that will project the insect coming in for the next summer in the public park kind of area like that. So with this kind of intellectual property, and it is something that he developed. It takes 5 steps to get that projection done. So with that being a secret, and he wants to sell it, and he wants to know the value of it. So how would anyone to figure that out? So the professional knows how to figure it out, because the professionals will look for a similar product, or even the absence of that product, how much of revenue it will generate. If it is a product that never really there, it's brand new, and then the professional valuator would go into these agencies or businesses that need this kind of forecast, and would do a survey for them, or would look at a replacement value, like how many other steps they take, and or the amount of money they wasted every year for that, so to come up with the income value. When that value gets established, then your valuation had one big step accomplished, then you give a future value. So the professionals folks will come up with a valuation for you if you are engaging them to do so. But of course, are they going to give you, I'm sorry, are they going to give you the most accurate value of all? Like accurate? No, it is a good estimate, right? So that's what I want you to know. Buy and sell is one of the reasons. What about securing financing? That's a big reason. When seeking loans or investment, or approaching potential investors or lenders, you need to understand the value of the business to assess the risk, determine the term of financing. As a small business owner, you might not want to spend thousands to get a valuation. Typically, banks and other investors will determine that value based on your input. So what's your input? Your input, a lot of it is probably future value. You're gonna be like looking at the blueprints and knowing where you're gonna go. And they're not going to loan money to you without verifying your blue sky projection. So in President Trump's case, if he falsely reported his property value without a CPA, and his lender should be the one taking the full responsibility to evaluate, verify the value. So I really think that in terms of securing finance, you as a small business owner, you give the bank what you think that value is. Obviously, you will have the most optimal thought in your mind to present that value because you want to get more financing from the bank. But the bank really, that's why they have underwriting department. They are the one evaluating, verifying, and to make sure that the valuation you give even makes sense to them. Then they will decide how much to loan you. They don't have to loan the amount you're asking. They can loan partial of your amount, or they can even give you more amount because your valuation was so under, they think you're worth more, right? So that is a big use of a valuation. Estate and tax planning is also important because when you die, the day you die, everything step up into market value, right? So let's say you die, but you got a piece of invention at the time you die and the market value a couple $1 billion, then look, your estate and tax planning gonna come to effect because you will be paying so much taxes if you're not really evaluating what you have properly and really start doing planning to minimize your tax liabilities, right? So estate and tax planning is a big area that need evaluation. And the legal dispute, of course, if you dispute on a property or on a business, if you're partners, if you and your partner and start fighting on the business, want to split, what do? You both want to know the value of the business so you can split it properly, right? And the periodic financial reporting, that also is a reason for valuation because when the bank or investors give you the money, they're not going to walk away and not care what you do. They so care what you do. So they want periodic financial reporting. They want to see everything you have. They want value to be consolidated. And then but you need to give a adequate disclosure and with careful elaboration of your assumption. Because you cannot just go do a financial reporting goes, oh, my brand worth, a couple $1 billion. And, normally a intangible value is determined at the time of sale. And the interim time, you want to give intangible value. It is not illegal. You definitely can do it, but you want to disclose that fully so the people who are looking at your financial report knows that is assumed value. So that is something that I always say you want to make sure that you disclose. And your financial statement, if it is not by GAAP standard, you need to disclose. If it is not done by the CPAs and the professionals and the third party, you need to disclose because your internal financial statement should not be good enough to go to the bank. You really need a third party report when you are dealing with third party and borrowing money from people. Okay, and the strategic decision making is also a reason for business valuation. Business owners use this valuation to make informed decision and like expansion, diversification, selling certain asset. I will tell you that I have experience on all of these three I just mentioned for community CPA. When community CPA are expanding to other areas, we used to be just in Des Moines, Iowa. Then we expanded to Iowa City, Iowa. Then from there, we expanded to Bloomington, Minnesota. And all of these things, when we do that, we actually did the valuation. We did that, and we're professionals, so we did that for ourselves, and we make that decision. We make that informed decision for ourselves. For example, when we did expansion, we actually know how much that would cost, right? We know how much the lease will be and what kind of cost will be, the people's cost. So we got a basic number, say $100,000. And then we also know that existing clients that we have from that area. So use our projection. We believe that we have 100 clients right now in that area, but if we set a physical location, it will double, triple that in less than 6 months. So with that said, I already knew what revenue it will be generating, then I will offset my expense. So we say, okay, it's a go. So with that said, I sometimes tell people that, people ask me, hey Ying, how do you expand? So I just simply say that if I have more than 100 clients, I do expansion. So that become a proven method for ourselves and over the years. So diversification. And do you just do accounting, or you just do tax return, or you just do audit, or you do business consultation? These business lines that we develop is diversification, because we don't want to tie our business into just one function. So we want to expand our business consultation area where we do business valuations for small business. So with that said, you see how that data, the business valuation, helps for us to go forward to diversify. So right now, I'm in the process of diversifying another line of service, which is financial wealth management. And with that said, and I'm not there yet, but I use business values, I use the client's data, and that we estimate, we project, so we make decision. Selling certain asset, believe it or not, I had failed business practice in the past. So once I calculated the value of the business, the loss I have, I sell it. I actually didn't even sell it. I want to sell it, but nobody wants it, so I just closed it. So with that said, you see how important that is for valuation. So you make the decision, right? So these are all the reasons for our small business owners to really know why we need a valuation. It should be very intimate to you, should be something you right away know what that is. Doesn't just belong to President Trump and his organization. It belongs to every one of us. It's a tool that we should learn to use. And just like how President Trump used it. And so we want to use it with more learning, with more learned knowledge, and learning from other people's failure, learning from other people's difficulty, so to make sure that as a small business, we can't afford to go to court like how President Trump does. He has money, but we don't. So we want to make sure that we practice it. We practice cautiously and know exactly what we do when we come up with our valuation. So, what is our best practice going forward? Learn from President Trump's civil fraud case, right? Here is Community CPA's recommendation. 1, conducting a business valuation. Know the purpose. Just know the purpose. Because every purpose you're trying to get to will trigger that valuation to be different. It is not wrong to have a valuation one way this way and the other way that way. So for example, I saw in the media that President Trump was valuating one property one way to get to the Forbes list, but evaluating the other way and to get the property tax reduced. So, I don't know between the two what's the difference, but to evaluate properties or businesses differently, that is a allowed methodology. There's at least 3 I mentioned earlier, right? You have income method, you have asset method, and you also have, I forgot the second method was listed there. But in my practice, when I do valuation, I have three approaches to it. One is income statement approach, which I call that. Then the other one is asset approach and equity approach. So with those approach, and the valuation comes through and very easy understand. So, as a professional, as a CPA myself, and I follow through the guidelines, suggestions that by AICPA. So those are the things we use to help our client to know what their value is. Sometimes these three different values offers vastly different number. Then what we also recommend our client is to add them up, divided by 3. So that way you get into a median point. And then of course, not just looking at the numbers on your book, but there is other things you need to do. That's why we are talking about best practice here, right? You know your purpose, understand why you are conducting valuation, different purposes such as selling, financing, litigation, and may require different valuation approach and methodology. So keep that in mind, not peanut butter approach, and no need for that. Even if you think that, well, that just means I'm going to come up with 3 set of fees for valuation. No, most of the valuation, when you approach the professional to do that for you, if you explain to them what's your purpose, they would actually give you different ways of calculation. So there is a different approach in the same work they give you that would help you to select the best value for what you need to use for. Okay, engage professionals like CPAs, attorneys. Valuation can be complex, and some people say that valuation is art. No, it's not art, and artists are too free for imagining. And maybe people, maybe Trump organization is on the artistic side, but I will tell you that the creativity, the imagination, the outside of box, the cloud approach for artists is not for professionals like CPAs, attorneys. These people are they're trained, they're professionally trained with the personality and to be very realistic. So valuation can be complex, and consider hiring professional. Considering hiring the professionals who has the experience and knowledge in your industry to do that. And I am in the CPA firm industry. So if you ask me, well, if a CPA firm comes to you, how do you evaluate the CPA firm? A lot of CPA firms are valued on the income approach. One, come to buy and sell. So these are the things. Every industry has the tendency, right? And in the real estate industry, and a lot of the valuations is based on future value, because some real estate doesn't have any value. The value cannot be compared from today to tomorrow. I'll tell you one thing. The higher the inflation we have in today's world right now, and I don't want to tell you what the rate is for inflation. What I want you to do is you're just gonna pull out a receipt from 2019, and I want you to look at the same thing you bought today, and you calculate inflation rate. So my last calculation was 18% on grocery, and I see this amount on internet here and there from different resources. So if the inflation is 19%, your property value should increase by 19%. It's just because the dollars doesn't work the same anymore. So in real estate industry, and to have inflated, quote unquote, inflated value is actually normal. You see that a lot because people believe these properties will appreciate. Okay, so but having said all of this, and of course Alan Whistleberg is not a CPA, and I don't know valuation how that was done. I'm not a lawyer either, so I don't really want to spend my time reading the depositions. But I want to say to you is, when you have a property And when you want to put the value on your personal financial statement so you can get loan from the bank, and you need to look at the market value. In fact, they even have a column for you saying what's your market value and what is your market value. That I know you didn't sell, so you didn't know what market value is, but you can actually have a future value embedded in the market value, because that's what it is. Depends on when you sell, right? And gather comparative financial data. This is referring to when you do valuation and you do want to look at how other people value the similar thing. So that's why when you sell your residence, say you move out of state and you go to another state, so you're gonna sell your home. And what your realtor do for you? They immediately pull out the 3 properties around you, how in recent month they were sold, how much they were charged, right? They tell you the price that was sold. That's the comparative financial data. So you always want to look around, making sure that there is a third-party provided reference. And in my work experience, I have done a business proposal for a shopping mall. So when I did that, and obviously the shopping mall is huge. So in the shopping mall, there's 20 other businesses that we're projecting can survive in the shopping mall and can make the money to pay for this amount of loan we're looking at, and the double-digit millions loans. So with that, and what we did is we looked for comparative financial data. So one of the 32,000 square footage of the space is being used for a high-end grocery store. So with that said, and we will go to the similar or same kind of high-end grocery store to figure out or obtain the financial data to see whether the operation, the population around the area will support that kind of revenue, whether the revenue will support that kind of rent, whether the rent will support that kind of interest expense that bank would like to charge after we borrow this double digits millions dollars, right? So with that, and we actually figured out this can be done. So today, it is a successful shopping mall. So that is come out of this valuation, understanding the projection using third parties documentation. Obviously, in our industry, and we have the first-hand information of any of the businesses who are working with us. So in this particular case, I went to, because it's in a different state, so I went to the business owner, get a permission for sharing certain data, and then we use that certain data, work with SBA, so got approved. You see, if we didn't have those comparative financial data, there's no way the bank would believe that we're going to generate all these millions revenue for this particular running. Then the borrowing, the payment would become an issue. So with that said, gather comparative financial data is one of the best practice to go forward to do business valuation, and use that to obtain loans and or security guarantees, and that's very useful. Use multiple valuation method. This is another best practice, and you don't want to stuck with one valuation method. You want to look for different angles and different approaches to come up with the result you like. So with that said, and you may say that, does that mean I have to hire different business valuation companies to do that? Maybe, and then maybe not. So some of the business valuation companies has experience with your industry, then you are already here. They also deal with the other industry, so they actually can come up with multiple methods. But if you work with someone who doesn't have a lot of experience, doesn't really know your neck of wood business, how they operate, and geographical location is also important. And if you evaluate a business in Florida versus the same business in Iowa, is very different. So with that said, you want to be very open to the multiple business method, difference by method, different by geographical location, different by industry, and also different by the owner's status. So there's a lot of things can come in to the valuation, and if the owner is ultra rich and it just have a lot of money outside of this business, and then that when you evaluate, and even if you evaluate the business low, but the security can come from there personally, so then again, you can still get what you want, right? But for small business owners, and when you sell your small business, just make sure that you get professionals like us, and who has dealt with small businesses as well. Know the area, to engage them. Like community CPA are in Iowa, we're in Minnesota, we're in California, so you have the local you have the local touch and feel there, and that would offer you a more realistic approach on your projections or valuations. Consider market condition. This is very key as well, and the market condition is something that when you do a valuation, you may run into a recession time. And back in 2019, it would have worked a lot more, but now it's different. So these are the things you want to take into consideration, because we do go through up and downs in business. Some business is just going down and they're not going to go up. For example, if we just talk about the cigarette marbles and the cigarette, those are the things are trending off, right? So when you evaluate a cigarette only industry, the value will be very little. But of course, they're not going to stay there, just do the traditional cigarette. They are actually doing other inventions to continue utilizing the same market share by promoting different products. So the business is going forward and using the business valuation, knowing the value is going down, and start growing other values. So those are the things we talked about earlier about strategic decisions in your business. When you look at your market conditions, the trend that can impact the business value. And the professional firms for sale, and baby boomers are now kind of just putting out their companies for sale. One really good example is that a lot of baby boomers are in professional services, for example, CPA firms. So they are at the age they want to let go of their practice. So if there's a lot of baby boomers are selling CPA firms, the value will be what? Will be going down, right? So that is the market condition. So when you do valuation, are you going to do income approach and do 1 times and more, or are you going to do 90% of the income, 80% of the income? So that is a consideration of market condition. Of course, there's other best practice as well. Then normalize financial statement. Adjust financial statement to reflect the true economic reality of the business. This may involve removing extraordinary expenses and income, things that just happen one-off, right? Accurately determine discount rate or capitalization rate, which plays a critical role in income-based valuation. Because if you are giving too big of a discount to your capital, to your asset, your income will go down, right? And clearly document the assumption, method, data used in valuation to ensure transparency. I remember when I was doing the mall projection, and the underwriter was calling me, asked me, "Hey Ying, and do you have any data? Do you have any assumptions in your data that would affect the projections that you give us?" Then I of course said, "Yes, absolutely. This is my sheet of assumptions, and this is based on what data we have." So I actually provided a assumption, like it's a whole sheet of assumptions. Of course, I have to do assumptions because such a big property, if we have 25% of occupancy is one thing, but what if we have only 50% occupancy? That whole projection is different. So, obviously there is assumption. You want to make sure that in your financial statement, you list, you document your assumptions properly. So the third party who uses it to do whatever they do for you, they cannot say that, "I don't know you did that assumption." No, you do. And that's why I always say that the amount of money you get from the bank based on the information you provided, as long as you did not lie about the information, whatever they give you is their underwriting responsibility. They decided your information is true and clear. That's why they give you the money. So just be sure that what you do is the documentation you give to the bank are true and properly documented. Access risk factor. Evaluate the risk associated with the business, such as market volatility, competition, management, and incorporate those into evaluation. The risk factor is big. One example I will give you is, if you have a business, small business, and you have this invention that you do, and only you know it. The rest of the 50 people who work for you, they don't know what you do, but they just support you. They issue invoice, and they call in client, they market your product. So you are the risk. Because if you die and your business is worth nothing, because everything is concentrated on you. And what if you just have a big customer? You make a couple millions a year, but I'm sorry, you just have one customer who give you that couple of million. That is a risk. And evaluating your business, I would evaluate your business as 0. Because if you die, that big customer of yours, the only customer of yours, and it's not coming through, do I have a business? No, right? So with that said, business owners, and especially my small business owners, if you want to sell your business, you need to remove that risk factor. You need to have your business running without you, so people who buy you can be sure that they're not going to lose everything after you're gone. And you cannot have one client as the only client, then call yourself a strong business. No, you are not. You are very, very weak. If your customer walk out of you, you're done, right? So this is where sometimes when I think of community CPA, we don't have big customers. We just don't. Our largest customer is only 1% of our revenue. So think of that. So do I have a risk factor related to the customers? 0. There's no risk factors. One customer leave, 100 leave, or 100 come in, 1 come in, it makes no difference, right? Because your risk is so minimal. But if you are doing a one customer kind of deal, and if your valuation is not going to be there, and nobody wants to buy you when you just have one customer. So that is a consideration, right? Consideration of control and marketability, and especially key for small business, assess factors related to control, marketability, and that is critical. And maybe your business is worth nothing, and you just don't have a marketability because what you have is going away, and what the control you have is too big. If you are gone, and that thing is fall apart. There's a lot of small business that I know and are working with me are really kind of in that boat. The more, I want to encourage my small business owners to just go on, really try to get away from that. Can you just let other people do your work? I actually just had a dinner with a business owner talking exactly this, because the property, the invention is so amazing. It is just him. But if it cannot be break down into steps, into a process, if that intellectual property cannot be defined outside of his body and the brain, and there is no value to it, because when this person is gone, this is gone. And if it is just one customer like your things, there's too much risk for anybody who wants to buy you, right? So the best practice going forward in this one is to make sure that you take care of these concerns, and then you can give yourself a big value. And compliance. Ensure compliance with any relevant legal or regulatory requirements in your jurisdiction. Very important. Very important. You don't want to forget that. Wherever you are, if you are in the state, allow this business, that's fine. But if not, you don't have any value. Even if your operation on the ground is going good, like drug dealers, cartels, they don't have value, and they're illegal. So make sure that your business is clear with government compliance, and it's also the last but not the least is independency. So when you work on business valuation to avoid this kind of civil fraud case trial like President Trump is going through right now, and the best thing to do is to hire independent business valuator to come in to do your valuation. And you may not like it, you can hire another one, but the key is a third party, not Alan Weisselberg, who is your CFO and didn't even have a CPA credentials under him. So there's a lot of lacking right there, and it's very easy to tell. But for our small business clients, yes, you're gonna pay money for independence, but that is well spent. It's much better than paying that money to get a proper valuation versus paying money in court to defend yourself. And let's hope that, we don't have information about how much President Trump is spending on his legal bills. And obviously, it is not a small number. It's not a number we can take, that's for sure. Don't you agree with me? And with that said, folks, do you feel like I offered you some good insight about the best practice forward, right? And we talk about those things, but the last one, like I said, is not the least. The last piece, independent valuation, that is a safety net for you. When you got things done by a third party, it's always safer. When you have your financial statement prepared by a CPA, and then the standards the CPA goes by is right on the statement. So that statement, the bank would rely on, and you would be relaxed. But if it is something you created, obviously the risk is with you. So with that said, I want to conclude our today's talk related to all these commotions related to business valuation. I hope I offer some clarities, advice to our small business owners. We are always here at 3 p.m. in the afternoon on Saturday. This is my time with you, and I hope you enjoy it like I do enjoy it. And please email Catherine at communitycpa.com and have her know what's in your mind, and give us a thumb up on our webinar, and go to subscribe to our channel. Tell your friends and relatives that we are here. We like to see our channel grow, and we are the only CPA firm in the country, because I checked online. There's no CPA firm open 6 days a week. We are year-round, Monday to Saturday, and from 8:30 to 5:30. And you can call us. We are always, we have real people on the line. And you also can email us at catherine@communitycpa.com and subscribe to our channel on YouTube. I will see you again on Tuesday afternoon.